Hi traders, so once again this will be being streamed. It's pre-recorded but it'll be streamed live on TradingView, where I'll be in the live chat for you to ask me any questions that you may have. I hope you enjoy. So let's get cracking. Okay, so let's start things off with the dollar as we usually do. We can see it's off a little bit this morning after there's been a few reports that troops are heading back to base and there's been a slight de-escalation. This is very fluid what's going on, so it's just going to have to be nimble and monitor it very closely. But yeah, the dollar is above this sort of range support at 95.5. It's back above this uptrend line, and now it's touching very close to the 50-day simple moving average, as well as the pink 21-day exponential moving average. The RSI has flattened over a bit. It's rolled over. It got up to close to the 60 level, which has been sort of resistance over here when price pushed higher again. For this high, we saw the RSI actually get into overbought territory. I've made it 9 on here because it just seems to work better for this particular instrument, but the others you'll notice is a 14-day period. So let's move on to the Euro US dollar, and we know that they have a lot of exposure to the Russia-Ukraine conflict, given their proximity to Ukraine, and it would hit the economies quite hard. So we saw that sell off. We're finding a bit of support now at this 50-day simple moving average. We're heading back to this range resistance here at about 113.5. We'll see if it can breach above that and maybe rally past that towards this downtrend line, upper trend line of the descending channel. And we'll see what the RSI does once again at the 62.55 level, which has capped price peaks in the past. Downside, this is where I'd be watching first 112.5. If we broke that, then we could essentially come quite close to 112 again, or maybe even the lows here. But that would need an invasion, I would think, at the least. GBPUSD, we're in this sort of very squeezy pattern here, narrow consolidation. If I draw in quickly on these, we've got a bit of a, looks like we've got a bit of a triangle pattern brewing here, which essentially either breaks out to the upside or the downside. What are the major levels here? 135.25, 38.2 percentage Fibonacci level. We got this upper trend line of the descending channel here. Above there, we've got the 200-day simple moving average. And below this little support line I've drawn in here, we've got the 50-day simple moving average, as well as the 50 and 61.8 Fibonacci levels. The RSI is getting quite close to the 60 level here, which, as we can see, I've drawn in a capped price peaks earlier. Be an interesting one to watch given its high beta to risk. Sterling. EURGBP seeing a bit of a bounce, as we saw. Let me just zoom in here. As we saw that bounce in the euro, a larger bounce in the euro as opposed to the pound, and that's obviously helping it a bit here, but very minor. We'll see if price does rally, what it does around here. We've got the two moving averages as well as that round number of support, 0.84. Below there, 0.83 remains a target where we saw. I wonder if that'll ever be broken. It's never been broken since the Brexit referendum. It's a major, major key support. So yeah, that's interesting. The RSI can't really gain too much from where it is lately. It's in a bit of no man's land. Moving on to the yen. I drew in this little, basically a flat-sided ascending triangle pattern with a projected target up here at 117.5. If you had to place your stop there, where I recommended not too long ago via one of my trade ideas on TradingView, you would have seen that you might have just survived this depending on where you put it, and you wouldn't have been tagged out. But this trade all hinges now on what happens with Russia and Ukraine, given that the yen's a safe haven. So we saw that big sell-off on Friday when the actual trade had broken out. It looked like it was doing quite well. It is holding in there, so it remains to be seen. But if it escalates the situation between Russia and Ukraine, then you will end up being stopped out, I would imagine. And then let's take a quick look at AUDJPY. It's a good one, risk barometer, and we can see, you know, risk is holding in there. It's bullish. It's above its 50-day simple moving average and the 200-day SMA. It's above that horizontal support there at 82.32. RSI again, not really too much value we can take from here. It looks like there's a bit of resistance there on the previous rally. So we'll see what happens when we get closer to these levels again now and see if price rolls over from there. Gold broken out of this downtrend line I drew in here, um, as well as that 1830 level on that news of an invasion. The RSI got up to overbought territory like it did there, and it seems to be rolling over a bit now. Seems now, obviously, with the de-escalation, it's coming off a bit, the repricing. Um, I think, shorting gold at these levels looks like the better risk reward trade for me. However, as I say again, it's dangerous because of the escalation risk. Although I'd say quite a lot of that is quite priced in already to some extent. I think if we see a full invasion, maybe we could get back up to these June highs from last year, just shy of 1920. Um, so yeah, that'll be an interesting one to watch. And then finishing off with the spot Brent, again, we're seeing a rolling over similar to gold due to the de-escalation and tensions. Um, and it's, I think $100 now is definitely in sight, particularly so if we see an invasion. But if we do see a bit of a rolling over, I'd first be watching around the 95, around this 91 level here, 92, bit of support around that 21-day exponential moving average. The RSI is sort of rolling over from overbought territory. So yeah, an interesting one to watch. I hope you've enjoyed Technical Tuesdays today, and I look forward to seeing you next week. Thanks for listening.